Good morning and a warm welcome to our investors meeting.
Good
My
morning.
name is Monika, Chief Marketing Officer at Profitus. I have been with this team for more than 5 years now, and I'm delighted to be the host today. In the past almost 6 years of Profitus operations, Profitus has been committed to fostering financial education and building a strong community of investors here in Lithuania. Today marks a special milestone as we expand our reach beyond our borders and welcome our international investors. For the very first time in English, Profitus is live. So we are thrilled to have you all join us live from various parts of the world. And at Profitus, our mission has always been to empower individuals with the knowledge and tools necessary to make informed investment decisions. Whether you are an experienced investor or just a newbie, starting the financial journey, and our goal is to provide as valuable insights as we can to foster, support the environment where you can succeed. In today's session, we have a short introduction of Profitus, crowdfunding platform, and our historical results. Also here with me today, our colleague Andri from Estonia, who
Hi, Monica.
who will share Estonia real estate market overview. So how are you, Andri, today?
Feeling great and ready to go.
That's great. That's
How are
wonderful
you
news.
doing?
As we navigate through today's agenda, please feel free to ask questions. We encourage this interactive and dynamic discussion. I believe that it enriches our conversation. So don't be afraid. Do not hesitate. Ask those questions in the comment section, and me and Andri will try to answer them during the session. So let's dive into today's session with the first topic that will be presented by me. As I have mentioned, for more than 5 years now, one of my main missions has been to promote financial literacy and to share knowledge about alternatives, especially crowdfunding, and my own experiences as by that time a newbie investor. Although investing is only one part of financial literacy, but it's an essential part of being able to build financial freedom. And I guess this is the goal for the most investors. So I would like to start at the very beginning, back in 2017, when our founders identified a significant gap in the market. Small and medium-sized enterprises were struggling to secure financing. The policies of traditional funding institutions were constantly becoming more conservative, leading to slow growth. Inflexible financing decisions. Traditional credit institutions often ignored small-scale real estate development projects. And with the economy changes, I would say that businesses were compelled to seek out for more cost-efficient sources of money. On the other side, investors faced their own challenges, and there was a lack of investment opportunities that offered higher returns with relatively lower risk. Traditionally, to invest in real estate, you needed a significant financial capital, which excluded many potential investors. And I would mention that especially young people who haven't raised that financial capital yet Moreover, investing in real estate is considerable to require for a huge know-how, a lot of time, resources that many potential investors simply did not have at the time. So together with the research institute, we carried out surveys in which respondents who have not started investing but are interested said that the main reason why they haven't started yet is because they do not know where to start. And perhaps this is a very good proof that there is a great need for a tool like platforms that simplifies the investment path and allows everyone to start from small amounts right here, right now, without concerns of losing all of their savings. So basically, simplicity, the ability to invest from anywhere in the world at any time, and low initial investment were the main advantages of crowdfunding. I have to mention that today I see a huge change in the market because not even bigger businesses, but also experienced and well-considered high net worth investors are also choosing crowdfunding. So how does it work? First of all, I think it's important to understand that crowdfunding main point is that money from a lot of people can be raised for some purpose. As a starting point, there was a donation-based crowdfunding. Then we saw platforms like Kickstarter, Seeders, and so on, finding new ways of investing through crowdfunding into equity, or getting a reward from the business for your money. Now we see that debt-based crowdfunding becomes the most popular, discovering more and more niches where it can be applied. First, we lend to people. This is called consumer loans, peer-to-peer lending, then into business loans. Now it became a special form to invest in real estate, although in most cases, it's important to mention you do not become an owner of real estate, but you get a real estate mortgage as a safety guarantee. And today we are at the point where lending not only to business and real estate or equity, but building wind farms, buying ships, making potato chips. We had one of those businesses borrowing from us, washing cars, or even to farmers. A platform works like a great intermediary that has a technical solution to make offers, to invest, sign loan contracts, and all administrative processes without you going to the bank or to notary. Just a few clicks away and you are a new investor who just invested in real estate. Platform makes it that easy. And Profitus' primary distinction and focus lies on small-scale investors. While we do have experienced investors who contribute millions of euros and are investing constantly, we are dedicated to making investment accessible to everyone. This commitment is reflected in our investment portfolio, where 91% of our investors are small-scale private investors, and only 9% of the portfolio consists of companies and institutional investors. To better serve our investors worldwide, we have partnered with a new payments provider last year. This collaboration aims to offer more convenient and efficient solution for all our investors abroad. So the Lemon Way is a French payment institution dedicated to marketplaces, alternative finance platforms, and other companies looking for payment processing, wallet management, and third-party payment in regulated framework. So they have a great experience with payments and regulated businesses in finance sector. So we trust that this gives us an opportunity to provide even better service to our investors. And perhaps the most important question for everyone to understand is how Profitus manages the risk and performance. What is the performance of our portfolio? Our team includes financial and real estate analysts, as well as lending market experts with over 20 years of experience in banking sector. I must admit that those who have joined us from the banking sector are usually surprised by the quality of our portfolio, as we manage risk with responsibility and firmly believe that the reputation is the cornerstone stone of this business. So we have a unique algorithm and assess not only borrowers' creditworthiness, history, reputation, experience, but we also require real estate collateral for each loan to protect our investors' investments. We rely not only on qualified third-party assessments, but also conduct our own evaluations. We thoroughly assess business plans, potential of business plan, pessimistic scenarios, and the collateral securing the investments. And on the right, you can see the ratings we assign to each project. I should mention that we will soon be updating our rating system, taking macroeconomic factors into account and further tightening our assessments. We will begin using a globally recognized rating system. So stay tuned for these upcoming changes. Mentioning that, I believe that the most interesting part is to see how we actually do. So let me show you some numbers on our portfolio. Today we have an exceptionally clean loan portfolio compared to the market, as most of the platforms in crowdfunding sector usually has 10-15% default rate or late loans over 90 days ratio. Today we have only 4.6% in overdue loans for more than 90 days. And I have to mention that we are exceptionally successful in recovering projects, and as a result, we have not lost a single cent of our investors' money in our history, almost 6 years now, as we started in 2018 August. And we have managed to become one of the top platforms in Europe, having the stable growth, our own technological solution, the team of experts that helped us to manage not only the growing part, but also the managing of our loan portfolio. And why investors choose us? Simply without numbers, I would say that the low risk tolerance, projects selected by experts, so you do not need a know-how in real estate to start investing. Diversified portfolio, we always have at least 6-8 open projects on the platform. Personalized customer service, we have done some checkups and research on the market. We noticed that we are the fastest answering platform. At least in Lithuania, we haven't checked other markets yet, but I believe that our customer support is an essential part of our businesses, and it helped us to become the leader in the Lithuanian market, and I believe it will lead us to the leader position in Europe too. Low minimum investment amount, starting from 100 euros, anyone can become an investor, and 100% of our investments are secured by real estate. So you can see in numbers that 78% of investors invested more than once. Most of them are investing constantly. I have to mention that those who invested only once are mainly the new investors who tend to wait for the first returns on the project, and then they start investing more and more. But in numbers, so we are even more attractive. We have almost 40,000 investors who have collectively crowdfunded more than 170 million euros on our platform for real estate projects and small, medium businesses. Historical return reaches 12%. We have already paid out 10 million euros in interest for our investors, financed more than 1,000 projects. As I mentioned before, have only 4.6% in default rate. Successfully repaid portfolio is around 120 million right now. So we have an active portfolio of 50 million today. I think that the most important part for those who are just starting to get to know us is that a loss of capital is 0% in Profitus, and we have never lost a cent of our investors' money. Today we operate in 3 markets, Lithuania, Latvia, and Estonia. Soon Spanish projects will be seen on our platform too. And I have to mention again that you can invest from almost anywhere in the world, except from restricted countries, of course. Let me share a few examples of the projects that you can invest in today. And I hope that my team is sharing the bonus code for you on the screen. You can use this code and you will receive 25 euros for your first investment with Profitus. You will also receive a referral code of your own. When you are using the platform, you can share it with friends. For each friend you invite, you can earn between 5 to 50 euros. The first few are, let's say, cheaper, but if you attract more than 7 friends, you will start earning 50 euros per friend. So that's a great opportunity to add some extra money to your investment account at Profitus. And starting with those projects I wanted to present. The first one is in Estonia, and as Andri is here, who is directly managing this project in Estonia, maybe you can explain more why is it worth investing in?
All right. Hello, everybody. So first, a quick introduction. My name is Andri, and I am Estonian project manager at Profitus. I started in Profitus in the last year in April, and we have done a lot of work to start our operations in Estonia and open the Estonian platform in Estonian language and attract different projects. And one of them is the Haigru 20A row house project in Kristiine in Tallinn. And this developer, why we chose this project, actually, as we will see a little bit later when we delve into the Estonian real estate market, and look at the statistics, there are many developers and companies who apply to loan from Profitus, but not all of them get through. Our filters are right now at this moment in this market quite fine. But this project, why is it good? First of all, the developer himself. The developer has experience of over 16 years. He has worked with the greats in Estonia, like Merko and Nordecon, and was part of really great and large projects, both in Tallinn and Tartu also. Now, this is his own project, and he found this perfect spot of land that is not far from Tallinn city center, but at the same time, if you go there and actually visit this place, you feel like you're somewhere outside the city on your own private land, nice and quiet, birds are singing. So the location is very, very good for this project. You can see that the LTV right now is at 63%. This is actually just a note calculated based on the land price only. Since then, the developer has invested 230,000 euros plus VAT into the construction. So in actuality, since we only take into account the valuation report that is presented, so we can't take into account the higher value until that, but in actuality, with the construction acts and everything, the LTV is actually today quite lower. And also a note that the maximum LTV will go to 70% and not 85%. So the project has a B+ rating, of course, for the great financials of the developer, for his great experience, for the location and liquidity of the project, which is very good. This is stage 4 already. Just a couple of months ago, they only had foundation there. And last Friday, we visited the roofing party. So the boxes, the final ceiling has been set. They are finishing up the roofing works, and we'll move on from there. The fact that while the developer is still has still not started to actively advertise this project, he already got first reservation, and actually the first pre-sale at the notary is happening tomorrow. So this is a great proof of this project and why we like it really, really much.
That's great.
Yeah.
It's actually a great opportunity for all investors who invest in stage projects to see the actual progress of each one of them. If you have invested in the first stage, as did I, you can see that, as Andri mentioned, the developer has built already the second floor of the building, and in the beginning we had only the foundation. So actually you can see your investment working in real estate project, and you can see the progress that you helped to make. This kind of investing usually inspires me to see people who are living in those places that I have invested before, how they enjoy the buildings. It makes more sense and gives me some kind of purpose to invest even more in residential buildings.
And we'll be talking a little bit more about residential real estate market in Estonia today also.
That's great. So the next one, the next project I wanted to present today is in Latvia. And the owner of this project has about 40 years experience in the real estate sector. They have been involved in construction of apartment buildings in Riga for the last 9 years. So they understand the segment, the market very well. According to the evaluation report, 68% of completion rate has been achieved. We can see that the customer has already started pre-sales. Currently, 38 of 122 apartments are reserved. I know that they are signing, at this moment, they are signing the contract for the business premises in this building too. So this is kind of a guarantee that after the loan term, the project owner will have the money to give back, pay out the loan. And this project has B rating, a bit lower than the one before, 10-14%. I have to acknowledge that in Latvia we usually see higher returns. And one of the reasons is risk management. It's a smaller market, but also they have a less competitive environment financial-wise there. So higher returns in Latvia usually. The owner of the project has invested approx 2 million euros in the development of this project himself. So this is one of great opportunities to make your money work for you in Latvia. And as we are from Lithuania, I will give you 2 examples of the projects in Lithuania, just so you can see the differences of all projects on our platform. Of course, we have not only residential houses, but also production houses, business premises where you can invest in. But this one is the apartments and modern apartments in Palanga, a popular resort town in Lithuania, 1 kilometer to the sea from this project. 17 out of 27 apartments has been sold already. The contract signed. This project also has 10.2 up to 13% interest rate. Only 6 months. That is important for those who want to start and try out the investment platform with shorter term investments. And also this project is a second stage. So we started financing it before, and I believe that we will finance it till the end of the project. And the next one is Alpha Lofts project in Lithuania. The owner of the project intends to purchase a building, a guest house with 60 lofts that will be reconstructed, and the estimated proceeds revenue from sale of 60 lots will amount to 4.7 million euros. The development is located in Naujamiestis, New Town, which remains one of the most popular districts for new construction and conversion projects in Vilnius. And the shareholders of the company have experience in such reconstruction projects. Over 30 projects have been financed on the Profitus platform and have been successfully completed and settled with the investors on time. This project is for 9-month period, 13% of interest rates, and the target, the purpose of this investment is real estate acquisition. So it's a different purpose in almost each project. So this is it from me. You invest, we do the rest. I want to thank you for listening and move forward to Andri's presentation, which will let us deep dive into Estonian real estate market. I hope, Andri, you are ready as you were before.
Yes, ready to go, Monika. Thank you.
Oh, just a second.
Yes.
Let's say hi to our colleague Urte, who is
Hi, Urte.
in the comment section. Hi.
Hi. Great to see you here. So, to correct you, Monika, about the deep dive, if we wanted to do a deep dive, we would do this for hours and hours. So I'll try to go over some important metrics and statistics to understand what is going on in Estonian market, what could be going on, what are the projections for the future, for the near future, and for the next couple of years, to maybe better understand from an outside perspective the outlooks and the opportunities here. Okay, so just a second here.
You said you were ready.
I'm sharing. Yes, I'm absolutely ready. I just have to share my presentation with you. It will take a few moments. There we are. Okay, can you see it?
I guess we still see not a presenting mode with the slides on the side. If you can start presenting.
Okay, it shows that it's in the presenting mode for me. So I'll try it again. Can you see the full slides now?
Just start going through the slides so I can check.
Okay. Next one.
No, it's not moving.
Next one. Okay.
Maybe you have few open files and try again.
I'll try again. Some technical difficulties. Be back in a moment.
And I see that the team is sharing referral code as we speak now that you can write in when you start registering on the platform. With this code, you will get 25 euros for your first investment. And yeah, I see that Andri is ready.
All right.
We see your presentation.
Okay, great. So, as I said, I've been with Profitus in the Estonian market since April of 2024. And I think Profitus has an amazing team of really great professionals. And we have been everybody, not just our Estonian team, with my colleague Argo, have been working really hard to make this happen, to get the Estonian projects on board. Me, myself, I have been in real estate for a bit over 15 years, about 10 years in the mortgage market. And I have given lectures in Tallinn University on the real estate investment, and also been in the committee for evaluating the real estate brokers exams. So let's go. Today we will talk about the inflation, what's going on, what has been going on, what we are seeing now, what could be going on in the future. We'll touch on decisions by central banks, ECB in our case in Europe. We'll look at the costs for construction, some barometers. We will look at the loan market. How is it performing? Is it growing? Is it not growing? Where is it going? And we will mostly focus on the residential real estate market, and mostly on Tallinn. In addition to that, we will look at the current residential rental yields, how they have been historically in Estonia, where they are now, and where could they go. So first, about Estonia. Well, I guess everybody has heard that Estonia is this technological and IT powerhouse, and we have the most unicorns per capita, and the education levels are really high, and so on. So this is nice, but let's also look at the numbers. We see that in March 24 compared to March 23, the credit growth, this means loans given out by credit institutions to private persons and to companies, is there at 5.4% year on year. Now the economy, or the GDP growth, has been sadly negative for a couple of years, because Estonia is affected by the tourism sectors of the tourism sector, because many businesses are relying on the Finnish and Scandinavian tourists, which happened when the COVID started, but we're recovering fast. So actually this year we are already expecting to go near zero, and next year already 3% or even over 3% of growth. The unemployment rate stays about the same, again, since the beginning of COVID, but there are projections for it to go down. So again, outlooks are good, things are getting better. And the annual inflation rate, April compared to the April of last year, this is actually a kind of a record. We haven't had this low inflation rate in the last 3 years. So this is quite a good sign. And also, if we think about the upcoming quite probable reduction in the ECB rates, this altogether could really make the market liven up and grow. So again, if we look at housing loans and stock of loans to households and interest rates, like all of these indicators are growing. Also long-term loans and average interest rate, of course, has grown compared to the same period of the last year. At the same time, we know that the Euribor is going on. We will look at the interest rates in Estonia, what they have been doing, and where they seem to be going, to get a clearer picture on that. And I'll start with some very, very, very simple slides. So this is the largest and most liquid real estate market in Estonia, apartments in Tallinn. And this is the offer prices. So this is basically how the market reacts since 2005 to everything that is happening in the market. And if we look at this graph, it seems like, oh no, we had a bubble at 2006 and 2007, then big crash, and now we have kind of the same size of bubble. But then if we look at the numbers more closely, we understand that the bubble that time, at those lower price points, meant that the prices rose during a couple of years more than 200%, really, really high. And this time they have risen only 40%. So there's a really big difference between those two. And also the crash that happened after that, prices then fell down, not by 100% to the previous levels, because of course, inflation keeps going, prices keeps rising, salaries keep growing. So it's logical to understand or believe that when there is a fall, it never falls to the point before the prices started to rise, but somewhere on the same axis where the whole trend is going. And of course, it's a simplified solution. We shouldn't look only at this graph. Then again, how much room there is for the prices to fall, if they fall, because some believe they go horizontally for quite a while. But even if they should fall, the fall should be contained within about 5 to 10%. And another slide, when we try to understand what is going on right now, is there a bubble, is there not, then this is the stock of loans and leasings to residents. And to residents, this means to local Estonian companies, and also residents as in house loans, so everything all together. And when we look at the black line here, this shows the annual growth rate. And this annual growth rate, we can already see where the big bubble happened leading up to 2007. And it actually already went down before the big crash, right, in 2009. And this time, there hasn't been such a growth due to many different reasons. And we will look at them today also. One of them definitely being that regulations have tightened and banks have not been giving out loans so easily as they were giving out the loans before. And also the reasons for inflation were a little bit different this time than the last time. So if we're talking about the final customer of this residential real estate, this family who wants to buy an apartment or house or a row house unit and live there, then we can see what happened again in the past. So when the crash happened, the home ownership rate went down. What this means, when home ownership rate goes down, this means that the tenancy rate goes up, right? So like the real estate is still there. Altogether, it's 100%. Just professional real estate investors entered the market. They bought up real estate. So now a little bit percentually, there are more real estate investors in the market owning the real estate than before. Since then, the home ownership rate has been quite steady, quite good at 82%. And if we compare Estonia to Europe, then we're still in the top 3. And an interesting picture ensues when you look at the Europe map. Now, the darker the area is on this map, the higher is the home ownership rate. And we can see that the countries that are quite young in European Union have comparatively quite young free markets. Their home ownership rate is higher. And when we go to Scandinavia, we go to the older Europe, with notable exception of Spain, where we are planning to go next. The home ownership rate is quite low. The Germany even under 50%, so less than half of the population owns their own home or lives in the home that they own. So there is lots of room to go in all of the Baltic states and other countries for the professional investors enter the market and provide these rental services. And also what we have seen that when there is saturation of those rental services in the market, then finally, but we're talking about years and years from now, the rental prices should go down, and being a home owner even won't be as preferred as it is now by the actual people who are living there. Now again, if we look further into what is going on with the consumers in Estonia, it's a good idea to look at the HICP, or the Harmonized Index of Consumer Prices. So they are fixed at 100 at 2015 on this graph, and we see the deviation with the European average, which is the violet line, and Estonian, which is the darker line. We see that the Estonian prices grew a lot higher and a lot faster than the middle, which is logical because, of course, in the small market, the fluctuations are higher. Now, the good news is that the growth rate itself, and again, as you can see in the past, When it grows in Estonia, it grows a lot higher. When it falls a lot lower. So this is the interesting part of a smaller country in the larger European Union. And the great news is that this rate, again, is right now, inflation rate really low, close to the European average. And of course, it is projected to the inflation to slow down even more. So right now we are at quite a good spot, and the hardest moment was in the summer of 2022, which is hopefully now behind us, and the outlooks look better and better. Now the housing price index, again, this means compared to the free income of the population, how affordable is the housing for them. So we see that this, it had a high growth between 2021 and up to 2022 second quarter, but then it has stopped, and the prices, or like the housing price, hasn't actually gone a lot higher for the consumer since then. Now, the producer price index actually has even gone down, because all of the energy prices and material prices that rose after COVID, and especially when the situation in Ukraine began, right? So this has stabilized. The prices have gone down. So it's looking again good for producers. And if we look at the construction prices now, this is very interesting to note here, and very, very insightful. That if you look at the years like 2007 and 2008, then we see that the workforce was the main, or the salaries was the main driver behind the rising construction prices. Now this time it was different. It was mainly material, not even machinery. The workforce salaries did not grow as fast, but it was the material. And since it has stabilized, so you can look at the total line here, which is this dark violet line. It has been the cost has been stable from the beginning of 2023 and up until today. And the workforce costs are going up at quite a normal speed, and at the same time, the material costs are going down. So this balances itself out. Now, construction barometer. There are, of course, many more indicators that show us this market, but we will look today at main three. So this is volume of construction work in the last 3 months, the order books at this moment, and based on all of the different indicators, the confidence indicator of the largest and main construction developers in Estonia. And we can see that we've had kind of a wave here, about 4 years up, 3 years down, and so on. And of course, we cannot base, again, what is going to happen in the future on the past 100%, because as you can see in 2020, when the COVID began, instead of a slight decline in the volume of construction works and order books, there was a really strong decline. And then it was followed by really fast growth again, which usually takes a little bit more time. So today, if everything else remains kind of the same, we are entering the 4th year of this slight decline phase. And if we look at all the other economical indicators and expectations, then we are hoping that again for the next 3-4 years, we will be on a nice rising curve. So European Central Bank. Yesterday, Philip Arlane, the member of the ECB's executive board, gave a speech. And in this speech, he said that there is, or we can imply that there's a high probability, and the markets actually are expecting it, that the ECB rates will be lowered by 0.25%. And it is expected that this rate cut will not be the only one this year, and that will be followed by 1, 2, maximum maybe 3 rate cuts throughout the year. What this means for the consumers, it means that the bank loans will get cheaper, and the housing will become more available to them. And also the high interest rates will not eat into the reserves of both, of course, the people and the companies alike. So if we're looking at the Euribor for 6 months, which is not the ECB rates, but which is actually outlook a little bit into the future, into the market, because it shows us at which rate the largest European banks are agreeing to lend the money to each other on average. And this average is around 3.8% right now, while the ECB rate is at 4.5%, right? So the expectation is that the rates will go down, and they will be definitely lower in 6 months. So this is a good sign for that. And in Estonia, if we look at the total loan cost, the long-term corporate loan and the housing loan with collateral, plus the 6-month Euribor, we can actually see that the total loan cost for housing for private individuals has already been going down for some time. And with the rate cuts expected, we're expecting it to go down even more. Now, the long-term corporate loans rates have remained kind of the same, or at least the average. We have heard, of course, stories with really low margins from some, but usually the average has remained about the same from the last quarter of 2023 up until today. With the rate cut, of course, we are expecting again this total cost for the companies to go down. The loan market. So this is the loan portfolio for and growth rate for the companies in Estonia, for Estonian companies. And we can see that it has been growing. The growth has been quite stable. Also, we can say the same thing about the loans given out to private persons and families for housing. There was a spike after the drop during the COVID time, where the market bounced back, but right now we are at more stable growth rate today. And if we look on the other side, what's happening with the defaults or overdue loans, then also this picture looks quite good. Actually, haven't been this good. We haven't seen between the years like 2013 and even 2019. So the situation today is better than then. We see a little bit of short-term overdue loans growth. And if we look at the portfolio here, so now the overdue loans up to 30 days is on top, and the lightest section here. So it shows kind of really slight growth, which is to be expected with higher interest rates, but nothing drastic has happened today, and we don't see any kind of high raise of these indicators as we saw in 2007 and 8 when the big crash happened last time. So let's go to real estate pricing and market. So these are the offers and the number in pieces of the offers and the offer price per square meter average in Harjumaa, this is the area that is surrounding Tallinn, which is definitely a market that we are looking in. And we can see, yes, that the prices dropped after the first quarter of 2023, at least expectations for those prices. But again, they have been quite stably growing now. And if you try to kind of draw the line between in the past, how they were growing before this 2021 second part of the year, really fast growth, then we could say that we are kind of where we need to be. Maybe a slight reduction is needed, but the picture looks already a lot better. If we look at the transactions, the number of transactions and the average price of those transactions with the moving average, 3-month moving average, transaction price has stayed relatively the same already since the last quarter of 2022. So while expectations have fluctuated, the transactions price have been actually quite stable. And we can see that we are entering the spring phase of the market, where usually the transaction volume is rising. And when we look at the Tallinn apartments, so here we are comparing the amount of offers, then the transaction price, and the offer price or of those apartments. So you can see that the transaction price fluctuates a lot more. Offer prices, they are relatively kind of on the same line, not that much seasonal changes there, and they are both quite at quite a stable growth rate. Yeah, while the amount of offers, the amount of apartments in the market is slightly declining. And if we look at the primary apartments, this means new apartments that have just been built and are being sold for the first time. Also, we can see the supply here, we can see sales in pieces and supply compared to the sales. Then there is a way to go to get back to our historical average, which is this nice blue bar in the middle. But we are on the way there. And if you look at the size of the portfolio in pieces, actually in 2018 we even had more unsold apartments. What is different if we compare today with 2018, of course, the demand was also a lot more. The demand was there. Lots of the apartments were also bought that were on the market. So, and there was a great decline. Again, if we look at the first transactions, which are those the very lowest columns there, yes, then you can see that in 2020, when the COVID hit, suddenly the transactions went down almost to zero. And then in 2021, they suddenly recovered. Now, of course, the big players in the market, they always look at these events and plan their future steps according to those events. And we can see that within about 1 year and a half, so this is at the beginning of 2022, at that time, actually the offers or the volume of offers in pieces was really, really low. So basically the developers stopped developing and were just selling off the apartments that they already had developed. And after that, they started back developing again. Right now, the growth rate is quite fine. Again, we had much faster growth rate in 2018. And the demand is step by step coming back into the market. So we are expecting things to normalize within the next year or two. If we compare the most liquid 3 cities in Estonia, which today are Tallinn, of course, the capital, Tartu, the great university city, and Pärnu. Maybe for Lithuanians, we can compare this to Lithuanian Palanga a bit, because it's also to the south from the capital. Nice spot for vacation for Estonians, lots of short-term rental business going on there, and hotels and restaurants. So what we can see is, again, the transaction prices have remained almost on the same level since second quarter of 2022. And right now we are entering the growth phase of the spring in Estonian market, and we can see that the growth actually happened, and it is going on, which is nice to see, both in transaction volumes and in prices. And just as a note, even the January this year was better than January last year in 2023. So month-on-month results also have been better. And the same with Tallinn in April. Also more apartments were sold than in April in 2023. Now let's look also at the rental offers and asking price, and we will look also at residential rental yields in Tallinn. So what we see here, again, we can see what happened in the past, in 2008, 9, and 10, 11, and the aftermath. Then this kind of a stable amount of apartments in pieces again on the market, while the prices constantly and rising in a quite stable fashion. And then happened COVID. 2020, you can see that the amount of the apartments entering the market, the long-term market, was quite high, not quite, but almost doubled. And of course, when you get a lot more offer on the market, but demand doesn't suddenly grow with it, then there was great pressure on prices, which brought the prices down. After that, they have been recovered. Those after the COVID crisis, those apartments have again moved away from the market, converted back into short rental apartments and Airbnbs. And with this, the prices have started rising again for rental apartments. So if we zoom in just a little bit and compare the new apartments, which is primary, fresh apartments on the market, and quite a few developers are offering this opportunity to rent the new apartment if the family cannot get a loan at this time with these rates. And versus the secondary apartments, you can see that there is a price difference at about 20-25%. And the total supply of those apartments have been is today a little bit higher than in the beginning of 2023, but not by much. When we look at the rental yields, though, we can see that now in 2020, when the COVID hit and the yields went down. So on this graph, the highest line is the sales offer price, the middle line is the sales transaction price, and the lowest line is the rent offer price. So while the transaction prices kept rising, the rental asking prices fell through a little bit, and then started rising at the same rate as the transaction prices, or even the sales offer prices, but they never quite reached the same level of the same vector that they were on before. So they are a little bit lagging behind today. And what this means that today the rental yields for Tallinn apartments is about on the same level as they were during the 2009 2010, and we can see that there are not that many rental investors entering the market today. They are waiting for the interest rates to go down, so the yields to go up, the prices maybe again relatively to the cost of everything else to go down, and then start investing maybe in the beginning of the next year. This, of course, doesn't stop seasoned rental investors with well capitalized to still grow their portfolio today, which we have also seen in Estonia that some are doing. But mostly if we're talking about fresh, new investors, not that much capital, then currently they are a little bit waiting for the market to improve, the yields to improve. Now, having said all that, if we look at the purchasing power of the average net salary versus the price of the square meter of the apartments in Estonia, then in all Estonian regions since the beginning of 2023, the purchasing power has actually risen, which is very good news. So when we combine all that we have seen and talked about today and learned today, with also the expectation that ECB will cut the rates, and maybe not once, but several times this year, making housing even more affordable to families in Estonia, we actually have quite positive outlook for the future. This, of course, doesn't mean that now we will be taking or accepting all customers that want. We are still looking at the risks, assessing them, understanding based on each individual projects, because you can have a project on one side of the road selling really well, and on the other side of the road not that much. So we're using this intricate knowledge of the Estonian real estate market to pick and choose the best projects, and only those we publish on the platform at this moment. On this positive note, we had a small celebration with the same Hydro 20A developer that we talked about earlier today with Monika, and they invited us to their roofing party last Friday, actually. So quite fresh. A roofing party is a big celebration in Estonia, and developers are putting up a huge cross on the roof of the buildings, and then the developer himself has to go up on the roof and then cut it down and celebrate that. In this case, of course, this is not a wooden house, it's a flat roof house. So no such roofers actually there as they usually are, but the final ceiling has been completed, and the roof will be completed soon. So really great honor, and very happy to be there. So if you have any questions, or if you had any questions.
Thank you, Andri.
Stopping sharing right now. Yes. Did we get any questions or comments about the statistics at this time?
No, not yet, but I think that the first live presentation is a bit of warm-up for the investors, because usually in Lithuania, I can share that we get at least 30, 40 comments in the section, and a lot of questions related to the markets, to Profitus investments, and so on. So I think with the future investor community events, we will get even more attention. Thank you for very great and I would say positive insights about Estonian market. I think that in Lithuania we have a similar thing of getting back to the previous level, step by step. It's a stable growth, and I think that as Profitus experience shows, stable growth is kind of a key to success. And I also want to share with those who just noticed Profitus for the first time and never have visited our webpage, to show quickly that it's pretty simple to use. You can see all the offers that are open on the platform. In the first page, you can see our statistics overview. But for those who want to get deeper into the statistics, you can open the statistics page and see all the numbers that you are interested in. And it's updated monthly, so you can see it all the time. Also, we are publishing the more insightful statistics that is strictly regulated in Lithuania, and you can compare it to other platforms too. So if you are interested in earning some more money, getting to know Profitus, I encourage you to use the promo code that we are showing right now on the screen. And with this code, you will get 25 euros for your first investment. As we come to an end of our meeting, I want to take a moment and just say thank you to each and every one of you who was watching all the time.
Thank you for me too.
Yeah, I think it was a great start, and we will provide those market overviews more and more frequently, maybe quarterly. Please do not hesitate to reach out to me, Andri, or any of our team members with your questions. And we, as I mentioned in the beginning, we appreciate the feedback. We are looking for more dynamic ways to make those conversations. And we really would like to get at least a few questions on the next meeting. And I wish a wonderful day for everyone, and see you next time.
Great day to you too. Thank you, Monika. Thank you, everybody, for attending. See you soon.
See you.